We have Suyog Kotecha joining us, CEO and Executive Director of Aarti Industries on the phone line. Suyog, great to have you with us here. Good morning. Thanks for joining us.
Good morning.
So for the chemicals industry and your business, give us a sense of U.S. exposure and what does 18% now mean?
No, I think it's a great positive for the sector in general and also for Aarti Industries. For a country, roughly U.S. accounts for 20% of our chemical exports globally, and in that context, $6 billion worth of chemicals get exported to U.S. from India every year. So in that context, this reduction from 50+% to 18% will help tremendously. Even for Aarti, as part of our total revenue, 17 to 18% comes from US. So it's also a sort of huge positive for us at Aarti Industries. But I think more importantly, the certainty will help sort of decongest a lot of decision making that has got hampered in the last 9 months from investments point of view, from future growth opportunities point of view. Mm-hmm. So overall, a very welcome move and a huge positive for the sector and for the company.
What were you paying on the 17 to 18% as it was charged 50% till now?
Yeah, I mean, the tariff varied based on the product lines. As we explained before, some products were paying full tariff, some products we sort of exempted as part of an extra 2, and some products, the clients were able to reimburse the tariffs.
So what was on an average volume weighted, what was the average tariff, Suyog?
I think roughly on 40% of the volume we were paying full tariffs. And I think that's going to get mitigated quite significantly.
40% of the about 18% you were paying full tariff. Yeah.
And your competitors, I presume mostly it would come from China, and other countries. Can you tell us what kind of tariffs they are paying and how would you be placed competitively now?
I think there are 2 major geographies against whom we compete, China and then Europe to some extent. I think with Europe we are at par, but given our cost competitive advantage, we should be able to compete quite favorably with them despite tariffs being, slightly favorable for them. China, now we will have a significant advantage, right? Because Chinese tariffs, if they continue to remain at existing level, then we will definitely have advantage over them as far as exports to US are concerned.
And China tariffs are 50% plus? What is the number?
In total, if you add up all different types of duties, they will reach closer to 50% odd level.
Okay. All right. Hi, Suyog. Good to see you in. So it's a positive coming in because you have managed to crack the father of tariffs. But what about the mother of all deals? You have some exposure to EU as well. And with the India-EU deal that was signed, are you a beneficiary?
We do have exposure to EU, though from a current business standpoint, it's low at around 5% odd level of our total revenue. But I think from a mid to long-term point of view, it's also a huge support because a lot of long-term partnership opportunities, specifically for European chemical players who are rationalizing their own capacity in Europe, will now get attracted towards setting up that capacity in India. So from a near-term impact point of view, it may not be material, but from a mid to long-term point of view, I think EU FTA is also very positive. I mean, as we discussed, if you step back, right, as a sector, this sector has been, impacted on margin side for quite a while, almost now 2.5, 3 years.
Okay.
But in the last 3 to 4 weeks, with the 3 macro events, I think EU FTA and I think US trade deal recently. But in addition to that, some of the Chinese anti-involution strategy that has also got announced. I think all 3 are actually a big macro positives for the sector, and we hope this will finally start to lead to margin recovery in the sector, which was sort of long due.
Got it. Suyog, let's get the near-term trajectory then. Year to date, you've done roughly around 14-15% growth in terms of revenues with margins in the vicinity of around 13.5 to around 14%. What do you end this year with? And on that sort of a base, what growth can you guide for? What about the margin performance from year on? And I think last quarter you did a capex of around 300 crores. Earlier you were talking about 1,000 crores of capex for the year, but you've upped that to around 1,100 crores. So run us through that detail.
Yeah, I think our midterm guidance is there out in the public, and we continue to stand by it. And in general, I think it's been a positive trajectory. All the actions that we outlined to achieve that guidance in terms of cost, operating leverages, and capex-led growth are in the play. Many of the actions around cost and operating leverages are actually already getting implemented. So I think we don't sort of deviate from that. I think from a capex standpoint, we are ballpark there. I think we said 1,000. Now we are at around 1,100 crores because we saw some incremental opportunities in the market, especially in the energy and polymer segment, and hence we decided to do a debottlenecking, so very efficient capex to get incremental capacity out of existing assets. But the annual number is expected to remain around 1,100 crore range.
Okay. Just one final question: do any of your products come under Section 232, which still attracts higher tariffs?
We will have to go through that. As far as we currently know, right? Okay. But we wait to read the detailed sort of fine print and then have a detailed evaluation. But currently, based on the information available to us, no.
Suyog, great chatting with you. That's Aarti Industries, was one of the hardest hit stocks post the India tariff, the lack of the India tariff trade deal. And today, you are seeing a surge in the stock price. Stock is up 12% now. Yeah.
Before